All right. Well, thank you for doing this, sir.
Yeah, thanks a lot, David.
Appreciate it. To start with, can you please tell me your name and what you do?
Of course, I'm Adam Reeds. I'm the CEO and co-founder of Ledn.
Okay, very good. And let's talk a little bit about your company. What is Ledn? What are you doing over there?
Ledn offers a suite of services on Bitcoin primarily, but we support Ethereum and stablecoins as well. And the entire platform is designed to allow people to save in digital assets. Our main product is a Bitcoin-backed loan where clients collateralize their Bitcoin and we lend dollars against it, so they don't have to sell their Bitcoin. And we also have yield products and a few other variations of different savings products as well.
Very, very nice. So how does Ledn differ from other lending protocols or lending competitors?
I think the most important thing is our risk management. So we've been operating for 6 years. We've never had any retail lending losses on the platform, and so we've been able to protect client assets, which is obviously the most important thing when you're looking to entrust a platform. And we've also really got good at keeping things simple. So I think one of the best sayings we like to have within the company is the best restaurants have the smallest menu. We try to do the same thing with how we offer a suite of services, so keeping it really simple. We're also a regulated company. We're based in the Cayman Islands. We have our virtual asset service provider registration there. And yeah, through experience, we've just got really good at making sure we have a really accessible way for clients to access our core products.
Yeah. I can imagine that during the 2022, maybe you were tarred with some of the bad behavior and bad actors happening back then. Is that a rough time?
It was a rough time. I mean, it was a rough time for the entire industry. And I think everyone was caught up in that. And I think, at first, you kind of paint everything with the same brush, and then you have to work hard to disseminate how you're different from others. And so, I think we just, at that point, we always had to prioritize client experience, making sure you're maintaining strong risk management. And because we did that, we made it through that. And now we're seeing the benefit of that because clients are saying, wow, if you could have made it through that high pressure time, let's see what you can do when things are a bit greener pastures. So it's been an interesting 18 months. We've now had the benefit of soaking up a lot of the volumes that the competition was doing before. And we're a bigger company now than we were 2 years ago. So it's an exciting time.
Survival of the fittest. Could you tell me a little bit more about your risk management?
Yeah, so I think when you're doing lending, there's a few different important things. So one is tenure matching. So if you're taking in client assets and offering open terms, so allowing clients to withdraw them at any time, you have to make sure that you're doing the same thing on the other side. So not locking up things where we're not putting assets into illiquid types of investments. So making sure things are matched on that side. The other thing that's important is price neutrality and asset neutrality. So if I'm offering yield on Bitcoin, I have to make sure I still have that Bitcoin. So to say something very basic, don't sell that Bitcoin for another type of crypto, because then you're introducing directional risk within the pricing of that. And the other thing to keep people honest is transparency. So letting clients know exactly what you're doing with their assets and keeping things simple under the hood. So we do something every 6 months, which is our open book report. So we tell clients how we're using their assets. We have different portfolios to show what type of companies we're working with to generate yield on that and how all the assets are sitting. And we're putting that transparency on ourselves and then offering it back to clients.
That's awesome. Yeah. Yeah, great. Those things sound simple when you say them, but obviously from the industry, but they're quite difficult to do, I imagine.
Yeah, they are. Well, I think, one, we're kind of reinventing new standards, right? And so I think that's what's holding the industry back a little bit is, in traditional financial space, you have ratings agencies that, assess different things. So people don't have to figure everything out when they're looking to choose what service providers to work with. And also within that, crypto has this interesting construct where it's global, but the regulation is local. So you have to have all these different piecemeals to understand how it fits in. So yeah, it is complex, but we're doing our best to put our own, in a way, our own regulation on ourselves that matches and again evolves as governments globally are picking up with it.
Yeah, I can see. I mean, obviously, adhering to regulation in different jurisdictions can become quite. I mean, that's like a task in of itself, right?
Yeah, exactly.
Absolutely. So, one of your main products is a Bitcoin-backed loan. Could you tell me what you think about Bitcoin as a collateral asset versus other traditional assets like gold or, even fiat?
Yeah, I mean, it's the most pristine collateral there is on the planet. That's because it's the same to everyone everywhere. Bitcoin doesn't care who you are, where you're from, what you believe in, any of the certain jurisdictional pieces that hold up other assets. Like for example, real estate, right? If I want to finance a home in even Europe, the financing rules in France are different than Canada. And then if we get into developing economies, obviously it's a lot more complex because you don't have the same property rights protections that you would have in certain jurisdictions. So you have to kind of really design things by that jurisdiction to make sure you're protected. With Bitcoin, because you can custody it in the same way everywhere, it doesn't have that same complexities, and then therefore you can offer the same rates and terms to everyone everywhere. So it's really the ultimate equalizer. It's the greatest fairness invention that's come apart really in the history of all financial innovation. So it's really exciting. I come from a background of doing energy finance. So I used to do big solar projects, big wind projects, big hydro projects, and there were so many local intricacies when you went to finance projects in different regions that you couldn't get the same terms. So it's so nice to be able to reflect and say, hey, this is the same. Now, how can we unify the experience across the planet? It's been great.
And I would imagine that for like retail people like me, uh, I've never even thought about this, right? Like what you just said, offering the same terms. I mean, it makes sense now that you've told me. But I'd imagine that this really is attractive to like more institutional players or like businesses where that kind of thing, that kind of issue would come up a lot, as you said in uh, uh, what's it called, financing projects in energy.
Yeah, sure.
So, are most of your users like individual retail users, or are you getting like institutions becoming interested in it?
Yeah, this is a common question that we get asked a lot. And it's actually split exactly 50-50 based on the dollar of size or Bitcoin size. So on the Bitcoin backed loans, most of our clients are borrowing on that side are retail, but most of the supply of capital is institutional. So that's how it works on that side. When it comes to the yield products, it's the opposite. So the supply of capital comes from individuals that want to earn yield on Bitcoin, but the demand to borrow Bitcoin comes from institutions that want to trade, for example, the ETF. So the ETF created a really interesting use case for creating yield on Bitcoin because you have TradFi rails that you're stuck in. So if I show up to my broker and I want to buy the BlackRock ETF today, it actually takes a couple of days behind the scenes to settle. And the institution providing that product doesn't want to take the price risk of that asset. So they borrow Bitcoin, print the unit, create the unit, issue the unit to the client, and then they settle it in the background. And then the lending enables that all to happen without taking that price risk on the underlying asset.
And that creates yields.
Exactly. That creates a little, because they're willing to pay a little bit so that they don't have to take the price risk of it. They just want to be issuing it. And that creates a great opportunity for our clients to earn yield on Bitcoin.
Interesting.
And then so we're not all yield is doing crazy things.
Right,
it can just be really simple things like, helping to bridge TradFi rails into the digital asset ecosystem.
Oh, that's fascinating. That makes a lot of sense. What about the volatility, right? Like, I mean, that's what everyone, at least that's the first thing I would think of.
Of course. So the structure of a core Bitcoin-backed loan, where we're issuing dollars against Bitcoin as collateral, is almost identical to how margin financing works for equities. So the advantage of Bitcoin is you have a 24/7 market and 365 days. So if I'm going to offer margin on Tesla stock, one, I have to worry about maybe Elon saying something crazy on the weekend, or any CEO saying something crazy on the weekend, because then I'm going to create extra volatility and I can't trade it. Versus with Bitcoin, A, you don't have a CEO, and B, there's no market hours. So you can trade out of the position any time of day. But again, to get back to the structuring of it, one, we don't offer 100% financing. So a client shows up, they want to borrow $100,000, they have to deposit $200,000 worth of Bitcoin. Then if the price of Bitcoin comes down, we'll ask them to add additional Bitcoin. And if they can't meet that, we do have the right to sell some of the Bitcoin to repay the loan. And that's how we protect ourselves. But vice versa, if the Bitcoin price increases, clients can withdraw some Bitcoin to keep their loan to value in check. So it's really even on both sides.
Right. Do you find a lot of friction during big sell-offs? Like, for example, going back to 2022, like that massive sell-off, does that create a lot of stress?
Yeah, I mean, a couple different stressors. So definitely when there's a price decline, one, clients want to top up. So we'll often get a lot of inquiries, making sure clients are keeping their loans in good standing. So we focus on having really strong client service, making sure we can get back to clients as soon as possible. We do not want to close loans, right? We're in the business. We're a for-profit business. How do we make money? We make money by having more loans outstanding. We also want our clients to do well with the loans so that they borrow more, they use more of our products in the future. So we're all aligned to keep loans in good standing. So we want to make sure they can do that. So we make it as easy as possible for clients to top up their loans. And yeah, 2022 was a pretty big exception. But one example I like that's more recent was in August when the Japanese yen crisis happened and there
remember
was a
that, yeah.
correction in Bitcoin. We actually saw a 12% decrease in Bitcoin in a few hours. We only had about 5% of our loans closed in that period. So I thought it was a relatively small movement for the size of the market change. And most of our clients had additional Bitcoin to keep their loans in good standing. So yeah, it's less than you think it would be.
Yeah, yeah. I'm just curious, off the top of my head, so how does this work from a tax perspective? Like, because obviously it's going to be different for every jurisdiction, but so far, is there like a general way that regulators have approached a Bitcoin-backed loan in terms of taxes?
Yeah, so it more comes down to how they treat Bitcoin. And then lending is obviously a way to not to defer tax, right? Nothing is tax avoidance; it's always tax deferral. So in jurisdictions that have taxation on Bitcoin, when you borrow against it, you are not selling it, and therefore you have the liquidity that you may have had if you sold it.
Right.
But instead of paying tax on that sale, you're deferring that to a sale at a later date. So it's a great, again, jurisdiction dependent, but can be a great tax planning method.
Okay, so yeah, it works pretty much like other assets that are used for collateral.
Exactly. So
Okay.
similar to taking a mortgage against real estate, you're not paying tax on that mortgage.
Yeah.
And actually, you can get a benefit because sometimes if you're using that for reinvestment, you can deduct the interest and you have kind of a double benefit,
Right.
not paying the capital gains today and getting a tax deduction from the interest you're paying on better utilizing that asset.
Yeah.
So
is that the case in America right now?
I believe so. Yeah.
Okay.
Again, state dependent, situation dependent, but yeah, a lot of American clients see those benefits.
Okay, very, very interesting.
Yeah.
All right, let's see. Just moving on because I want to get to some other stuff. So obviously, America has been pretty antagonistic towards crypto, and the regulation around crypto has been murky at best, I would say. Do you operate in the U.S.?
We do offer loans in I would say about 50% of the states today, depending on the regulation that exists in there. We're working on obviously offering our loans to all states, but we have to be really careful about compliance. So when it comes to operating a Bitcoin service, it depends on the activity you're doing in there. So when we're offering loans, it's consumer lending rules typically, and there may be different rules whether we're lending to an individual or to businesses. And then there may also be rules around anti-money laundering around Bitcoin itself. So there's a lot of different checks that we have to follow, and we open it up based on obviously a cost benefit to making sure we can provide services profitably in that region.
I don't know this, but just it sounds like America's tax situation is pretty messed up. If it's on a state-by-state basis,
Yeah,
so it's like 50 individual jurisdictions.
It is, but I mean, fortunately, you have very large economies within each of the most states. So,
right.
In most cases, it makes sense to figure it out. But sometimes, we have to be selective and say we'll come back to it when it makes sense. Yeah.
Is that exceptional, right? Like, is America like one of the worst in terms of like how each little individual area is different?
Yeah, I mean, definitely from a uniformity perspective, it is. But sometimes you have to treat it like 50 individual countries, right? Because of the size of the economy, again, the size of the opportunity.
Yeah. So, like, most other countries aren't like that, though, right?
Canada actually does have similar. So I'm Canadian. Canada has regulation by province. And so there's different securities laws by province. There's different lending rules by province. And so even within Canada, we offer our services and products in some provinces, but not all.
Okay. Interesting. Now that this Trump administration is coming in, everyone's thinking that, like, obviously, America's what's it called, relationship with Bitcoin and crypto is going to be a lot more friendly.
Yeah.
Maybe a lot more helpful. I was wondering if you have any guesses or predictions about how regulation might change towards this, and that would of course affect your business.
Yeah, so I think the biggest clarity will come out of whether Bitcoin is regulated in the U.S. by the CFTC as a commodity or whether it's regulated as a security, and I think it'll be product specific. But I think overall that'll be an interesting change to get some uniformity. I think what every business is looking for is how do I do more with less, right? So how do I, if I focus on one licensing, can I do more with that instead of doing 50 different licensing or registration and then getting less business with each registration, right? And that's not an American thing, that's a global thing to make sure you can maximize the amount of activity you can do by a certain amount of effort. So I don't think anyone's looking to do to make things less secure or less compliant. They just want uniformity so there's less duplication, right? And to the extent that you might have to have several registrations, but the work is the same, that's okay too. Because as long as you just don't have to create the same document and change too many things to get to effectively the same result of consumer protection, which everyone wants.
So you would guess then that that the regulation around this would just become, as you say, easier for businesses to navigate. Not necessarily, a free for all, open up the gates, but just like more efficient, basically.
Exactly. Make the form the same, right? If you got to fill out some information, you got to tell people what you're doing. Don't make me do it in 20 different ways to get to the same result, right? Don't reformat the same essay
Gotcha.
into 20 different versions, and then everyone's better off, right?
Yeah, gotcha.
And it's even easier to enforce the regulation as well, because if you have to have the same mandates, if there's the same requirements, now you know when people are outside of the regulation too, versus having some really unnecessary intricacies.
Cool. All right. I think personally that moving forward, crypto is going to get like a pretty noticeable bump in terms of adoption, especially with America changing its stance. I was wondering, for your business, where do you see it kind of going in the next 2 to 5 years? For example, moving into emerging markets, loan sizes. Are there going to be more smaller loans, more bigger loans, both? I mean, I would love to hear what you think about your area.
Look, David, this is a stat I love. So if Bitcoin today is about 2 trillion at 100K, I think the market for retail lending, the type of loans we're doing, is about 1 to 2 billion. It's really small, right? So less than 0.1%, really, 0.1, 0.2% of the overall potential. Mortgages in the US, 60% of homes have a mortgage on them. So let's think about that. As more people start to use Bitcoin as a store of value and store their global wealth in Bitcoin, they're going to need financial products on it. And if Bitcoin moves like real estate moved in the mortgage market, think about the size of the opportunity just with more Bitcoin having leverage on it. And so I love that. I love the fact that we're getting a tailwind with a higher percentage of Bitcoin accessing financial products like ours. And then I love the tailwind of Bitcoin being worth maybe 250 next year. Obviously, price increases, everyone's happy. And then for us, more geographical accessibility. So we're primarily based North America, South America, and Europe today. That's where the majority of our clients are from. So I'd love to see Ledn more global. Obviously, I'm speaking to you from Abu Dhabi. We're exploring opportunities in the region. Asia is a huge market as well. The world's a huge place, and America's one piece of it. So I think for us, we want to be everywhere, but we want to do that where we can offer the same level of service that we do today. So doing the same products, but growing them geographically is our focus.
Very, very cool. And then, I can imagine, like, as you say, one of the things that will happen is as people put more of their wealth into this, the financial products can, there'll also be more financial products that you see in traditional finance.
Yeah, that's it. Yeah, exactly.
Cool. All right. Well, thank you very much for this interview. I appreciate it, man.
Thanks for your time.
Yeah.
Cheers.
We're done.